The Memory of the Future, a comprehensive guide to the iShares MSCI South Korea ETF, EWY. As of March 7, 2026, the iShares MSCI South Korea ETF, ticker EWY, has transformed from a cyclical value play into a primary strategic vehicle for the global artificial intelligence AI supercycle. While the early 2020s saw South Korea often overshadowed by the Magnificent Seven in the US or the Silicon Shield of Taiwan, 2026 has marked a distinct Korean renaissance. The narrative has shifted. Investors are no longer just looking at Korea as a manufacturer of cars and ships, they are viewing it as the global AI foundry and the world's most vital supplier of high-bandwidth memory, HBM. Following the landmark corporate value-up reforms of late 2025, which aimed to fix the Korea discount, the EWY has become a focal point for institutional capital looking for growth at a reasonable price. This guide will walk you through the memory supercycle, the specific giants that power this ETF, and the critical risks you must weigh before starting an investment today. 1. What is EWY? The pulse of the Miracle on the Han River. EWY tracks the MSCI Korea 2550 Index, providing broad exposure to the large and mid-sized companies that dominate the Korea Exchange, KRX. To understand EWY, you must understand that South Korea is one of the most technologically advanced and export-dependent nations on Earth. The 25-50 rule. Because the Korean market is dominated by massive family-run conglomerates known as chaebols, specifically Samsung, the 25-50 rule is a vital safeguard for investors. It ensures that no single stock accounts for more than 25% of the fund, and the sum of all stocks with weights over 5% cannot exceed 50%. This creates a more balanced exposure than a pure market cap-weighted index, which would be overwhelmingly concentrated in just one or two names. 2. The 2026 portfolio, the HBM and AI hardware kings. When you buy EWY in 2026, you are buying the physical infrastructure of the digital age. The fund is heavily tilted toward information technology, approximately 35 to 40%, but it also offers significant exposure to industrials, financials, and consumer discretionary. Samsung Electronics, the global behemoth, approximately 20 to 22% of the fund. Samsung remains the undisputed anchor. In early 2026, Samsung is in a massive CapEx expansion phase. Having successfully cleared technical hurdles for its 12-layer HBM3E chips in late 2025, Samsung is now a primary supplier for the newest generation of AI servers. Beyond chips, Samsung's dominance in smartphones and foldable displays provides a steady consumer cash flow that balances the cyclicality of the semiconductor market. 2. SK hynix, the pure-play AI memory winner, approximately 8 to 10% of the fund. If Samsung is the giant, SK hynix is the sharpshooter. In 2026, SK hynix holds a leadership position in the most advanced AI memory, HBM. Its strategic partnership with NVIDIA has made it one of the top-performing stocks in the Asian theater. For an EWY investor, SK hynix provides the high beta growth that captures the immediate upside of the AI infrastructure build-out. 3. Hyundai and Kia, the value-up leaders, approximately 6 to 8% of the fund. The Korean automotive sector is undergoing a massive valuation re-rating in 2026. No longer just budget options, Hyundai and Kia are leaders in the transition to electric vehicles and hydrogen fuel cells. Furthermore, they are the poster children for the 2025 Value Up program, having increased their dividends and canceled treasury shares to boost shareholder returns. 4. POSCO and LG Chem, the battery backbone. Korea is the non-China leader in the EV battery supply chain. Companies like LG Chem, parent of LG Energy Solution, and POSCO, a steel giant turned battery materials leader, give EWY exposure to the physical materials, lithium, nickel, and cathodes required for the global green transition. 3. The 2026 catalyst, fixing the Korea discount. The most significant development for EWY in the last 12 months isn't technological, it's governance. Historically, Korean stocks traded at a discount, lower PE ratios, because of low dividend payouts and complex chaebol structures. The Value Up program of 2025-2026. Modeled after Japan's successful market reforms, the South Korean government implemented strict value-up guidelines in late 2025. Forced transparency. Companies must now report their plans for improving shareholder value. Dividend growth. In early 2026, EWY saw a record number of companies announcing dividend increases and share buybacks. The discount is shrinking. For investors, this is the hidden growth story. If Korean stocks simply move toward global average valuations, EWY could see significant upside even if earnings stayed flat. 4. Financial performance, the 2026 export boom. As of early March 2026, the South Korean economy is firing on all cylinders. Key financial benchmarks as of March 7, 2026, current price $71.20, trending near the upper end of its 52-week range. 2025 total return, 28.4%. Year-to-date return, 2026, 11.2%. Dividend yield, 2.1%. While historically low, this yield is on an upward trajectory as the value-up reforms take hold. Valuation, forward PE, currently trading at roughly 11.5 to 12.5 times. Compare this to the US market at 24 times or Japan at 16 times. Korea remains one of the most attractive value entries into high-tech growth globally. 5. Sector dynamics, the triple threat of Korean industry. EWY is not just a tech fund, it is a play on three distinct global themes. AI hardware and chips, as mentioned, Korea is the memory hub for the world. The defense export surge. In 2026, Korea has emerged as one of the world's largest defense exporters, K-Defense. From K-2 tanks to self-propelled howitzers, Korean defense firms are winning massive contracts in Europe and the Middle East, providing EWY with a geopolitical hedge. K-content and e-commerce. Companies like Naver and Kakao, the Korean Google and WhatsApp, plus the global spread of K-culture give the fund a consumer tech edge that is unique to the Korean peninsula. 6. Critical risks, the 2026 watch list. No investment is without danger, and EWY carries three specific risks that could trigger a 10 to 15% correction in mid-2026. The export sensitivity risk. Because Korea is an export economy, it is highly sensitive to a global recession. If the US or China experiences a sharp slowdown in late 2026, Korea's orders for chips and cars will be the first to drop. Geopolitical noise. Tension with North Korea is a permanent feature of EWY. While the risk premium is usually baked into the price, any sudden escalation can cause short-term capital flight. The currency volatility, the won versus the dollar. EWY is unhedged. You are holding assets in Korean won. In early 2026, the won has been relatively stable, but if the U.S. Federal Reserve surprises the market by raising rates again, the won could weaken, leading to currency losses for USD investors. The memory glut fear. Historically, semiconductors are a boom and bust cycle. While the AI boom feels different in 2026, there is always a risk that Samsung and SK Hynix build too much capacity, leading to a price collapse in 2027. 7. Strategy. How to position EWY today. In March 2026, the smart money is treating EWY as a high-quality tactical growth asset. The satellite approach. The 5 to 10% allocation. Because of its volatility, beta of about 1.3, most financial advisors recommend EWY as a satellite holding. It provides the alpha, market-beating potential that a boring total market fund lacks. The value up long play. If you believe the Korean government is serious about corporate reform, the best way to play EWY is through dollar cost averaging, DCA. By buying a small amount every month, you smooth out the geopolitical noise while capturing the long-term valuation re-rating. Technical levels to watch. The stock recently broke through a major resistance at $68. Technicians see the next major target at $78.50. For a new investor, buying the breakout can be effective, but setting a trailing stop loss is a prudent way to protect your capital in the volatile Korean market. Conclusion: the indispensable foundry. The iShares MSCI South Korea ETF, EWY, in 2026 represents the ultimate convergence trade. It is the meeting point of undervalued industrial giants and cutting-edge AI hardware. By successfully navigating